Okay, we're adjusting our camera. Give us 1 second. Well, welcome to our first live home buyer and investment webinar with Guardian Mortgage. My name is Sierra Tate with Park One Properties, and this is Whitley Stout with Guardian Mortgage, and we are so happy to have you here with us today. We are really doing this for a few different reasons. Now, I know we are in the middle of a pending government shutdown. Everyone knows about that. We have inflation going on. A lot of people have a lot of uncertainty going on. But at the end of the day, there's one thing that's certain: people have to have somewhere to stay. Everyone has to pay rent or mortgage. A lot of people are thinking about the streams of income because a lot of people need that. So today's conversation is really about that. And at the end of the day, you want to have this talk. So we're bringing it to you. And we also have something that we really want to just put on your mind. Today in the Dallas market, there is an influx of inventory that's a so what does that mean to today's buyers? That means that you have the advantage over the people who are scared, over people who are facing the fear. You have the advantage if you get off of the bench, if you say today is your time, if you say today, I am going to take the first step. The first step is listening to this conversation and being a part of the people who will take the first step. So without further ado, I'm going to let Whitley take the lead.
Hello, everyone. Like she mentioned, I am Whitley Stout with Guardian Mortgage. So Guardian actually officially changed our naming convention just a couple weeks back. We are under a bank, have been under a bank for about 8 years now. So Sunflower Bank is our new title. A big thing, the reason that I mentioned that is there's different mortgage professionals that you can go to. There's mortgage banks and there's mortgage brokers. They offer different benefits. They offer different reasons why you could choose one over another. I am working for a bank, so there is specific things that I can do that a broker may not be able to do, and vice versa. We have portfolio products, things inside our bank that we can keep, that maybe a couple guidelines can be looked at differently or kind of in a gray area that brokers may not be able to do. We also keep the servicing on our loans. So our servicing company is in Plano. So you can take your payments there. You can work on insurance claims there in the office. And our escrow analysis, every big piece of the servicing of the 30-year loan, that is something that you can do at a bank versus going to a broker. So I just mentioned that as kind of a first step when you start looking at different lenders and look at different reasons to go to one group over another. But I think today we'll just kind of walk through the home buying process, what to look for, what questions to ask, and we're here to help and answer any questions that you have. So through the home buying process, the first big step is obviously finding a lovely realtor that can help you. But even before that, you have to determine what your budget looks like. You have to determine what you are able to afford versus comfortable affording. You may be able to afford a $4,000 payment, but after $4,000, you're only left with $500 a month to eat, get gas, pay bills, and that's not a fun way to live. You don't want to be house poor at the end of the day. So our first step is the pre-qualification process. So you would reach out to someone like myself or another lender to determine your budget and what makes sense for you. With that process, we would do a loan application or a 1003. We would gather all information from you for the past 2 years as far as income, assets, where you've lived, all of those questions we would ask. It usually takes about 10 minutes to do a real full application. And we would verify all that information to see what makes sense for you. So we gather pay stubs if you are a W-2 employee, pay stubs, W-2s, tax returns, bank statements. We want to check out all those documents to see what makes sense for you. Because on paper, you may be able to afford something, but like I said, you may not be comfortable at that payment. So you always want to have the discussion of your budget may be X, but what are you comfortable with your budget being? So that would be our first step, is that pre-qualification process. After that, we'll work through loan options. So there's different loan programs. She mentioned credit score is a big one. So credit score is a big reason why you may pick a certain loan program. There's FHA and VA. Those are two government-backed loans that often offer a lower credit score option. So at Sunflower, you can get a FHA and VA loan at a minimum of a 580 credit score. And that is pretty phenomenal because the minimum credit score is anywhere from 300 to 350. So to be able to get a credit mortgage approved loan at 580 is pretty awesome. And I have other lenders that I do business with that they can do below 580. So don't just think just because Whitley Stout can't do my loan at 580 or 580 scares me. There are lenders who can go below that. There's just different qualifications that loan may need. So always be open to the conversation. Everyone has a network of resources, or should have a network of resources that they can tap into. So I mentioned FHA and VA has a 580 credit score minimum. Conventional has a 620. Conventional is a Fannie and Freddie backed product, not backed by technically the government. So the credit score requirement is slightly higher, and there's just differences between the programs. Conventional has private mortgage insurance, where FHA and VA have public mortgage insurance, mortgage insurance premiums or funding fees for FHA or VA, depends on which one you're able to qualify for. And then even beyond that, there are tons of other programs. There's USDA, there's down payment assistance, there's tons and tons and tons of options. That's why you want to find a great lender that has a lot of options for you, but is willing to have the open and honest conversation about what is available to you in your situation. Because every person and every loan program is different and unique, and you have to be willing to listen, be open, and be honest about all goals and parts of the process. So those are kind of two big things: pre-qualification and loan program options. Once you've discussed those things, which one makes sense and which one you can do, then we'll go back to our lovely realtor and start the home search process. Because I will tell you, your monthly payment goal is $2,500. We'll make up a number. The reason I say that is you'll hear so many lenders and so many people out there say, well, what house can I afford? Well, you may be able to afford a $500,000 house as long as the insurance and taxes are low. So maybe it's in a tax rate area that's lower, or it's a new build, so the insurance is slightly lower. Versus a current existing build, $500,000, the taxes may be higher, the tax rate may be higher depending on where you're buying, and the insurance more than likely will be higher because of the roof age, because of the age of the home, just different factors that play into insurance. The two $500,000 houses are not the same. So in mortgage, we qualify you to a payment, not necessarily a purchase price. So be open about that conversation with your lender. So we may not be able to tell you flat out $500,000 is your maximum. It will depend on several factors that play into our principal and interest. I can give you a range based on the type of homes and areas you're looking in, on those property tax rates and insurance rates, but there's no cut and dry, this is the house that you can afford. I can tell you though, this is the payment maximum that you can afford. Your monthly payment maximum on payment is X. Like I mentioned earlier, $2,500 as an example. It's just, how do we get to that $2,500? There's various ways to do it, various ways to get to that payment goal of what we want to get to.
So that's very important then. So it's not really so much as like how I was talking about earlier as far as the Instagram houses. It's more about how much of a payment can the buyer actually afford. It's not the price of the house. It's how much of a monthly payment, taxes, everything included, can the person actually afford.
Exactly, because there's so many things that go into the payment. You've got your principal and interest portion, which is your mortgage. So you will be paying that every single month you pay back the loan. There's homeowners insurance that we have to qualify off of because you are required to have homeowners insurance when you have a mortgage. There's property taxes. Every home in Texas, unless you are 100% VA disabled veteran, you are going to have property taxes that we have to calculate that payment off of. And then depending on your down payment, we have mortgage insurance, whether it's MIP or PMI, FHA versus conventional. All of those things come up to your total PITIA mortgage payment, principal, interest, taxes, insurance, and potentially a homeowners association dues. So we take all of that to give you a number. So those 5 categories potentially, I have to plug in to see what home price you can get to. So there's no cut and dry purchase price, but there is a cut and dry payment.
Okay.
Absolutely. So
Okay.
whole lot of things that go into it, which is why you want to have a lender that will have the conversation with you open, honestly, and just educate you. Because I had a client one time walk in, first time home buyer, probably 25 years old. We were talking through all these different loan programs, options, payments, and I finally gave her payment of, you could afford, I'll make up $2,600 a month on paper. She goes, well, I don't want to pay that. That'll leave me $400 left every single month that I have to pay gas, food, tolls, whatever the case may be. So you may be able to get to that payment, but you may not be comfortable with it. So you just want to have the entire conversation with the lender about goals, ideas, where you want to live, what can get you to that number at the end of the day. So a whole lot of things.
Yeah, that's a lot to cover. A lot.
And you also want to have somebody that, if you're comfortable with it or want it, that's willing to meet you in person during work hours, after work hours, on the weekend, because it's a lot that goes into this, especially if you've never purchased a home before. There are so many things to discuss in the process. I mean, at the end of the day, you're at that closing table, you're going to give me about 60 signatures. Yeah. And I want to talk you through, what does that look like? What are you telling me you're agreeing to?
Right. And if you guys want to let us know in the comments, what is your main concern at this moment? Is it the down payment, as Whitley is talking about? Is it, you just don't know where to begin right now? You need someone like Whitley and her team to kind of guide you, tell you what you qualify for right now? Or is it that maybe you actually already know, you've already gotten a pre-qualification, but maybe you just want a second opinion? Maybe someone told you only qualify for $200,000. Maybe you want to see if her and her team can get you $400,000 or $500,000. Tell us in the comments where you're currently at right now, so that we know where you're coming from.
Absolutely. And with the whole budget too, going to different lenders can help, because each loan program has certain things that we're able to do with it. So one loan program, I may be able to count your overtime because you've been there 12 months. One may require 24 months of overtime to count it. So you may make $1,000 of overtime, but if I can't count it, I can't count it. Based on that specific loan program and those specific guidelines. So make sure you have a lender who's been doing this a while, is knowledgeable, understands the guidelines, because they may tell you up front, yeah, I can use that overtime, but if you've been at that job 3 months, I can not promise you, but I can almost guarantee you that cannot be used, because there's no history of that income. We are all off of history. Every lender is going to require looking at the last 2 years. Income, assets, living. What do we need to see that you've been doing to see what we expect you're going to do in the future? Because we're making sure you can afford this for 30 years.
And some of my clients, because I do property management and leasing too, so some of my clients, they have adult children who've lived in the house 2, 3, 4 years, and they're still working at the same job at Lowe's, Home Depot. So if they're going to still live in that house, that income can count if they've been at Lowe's and Home Depot for 2, 3, 4 years, right?
Absolutely. And especially right now, multi-generational living is happening and a thing. I've got a client right now shopping, mom and daughter. Mom's daughter signing on the home to help the mom qualify for it. Daughter's not going to live in it. We call it a non-occupant co-borrower, but she's helping mom to be able to get into that house. So both situations, if they still live or if they don't live there. So we just have to evaluate all possibilities. I've got another one. two clients, son and daughter, and mom, they're doing the same thing. Son and daughter won't live in it, but the mom will, and they're going to help her afford that payment on paper because I couldn't count certain income that she had. So there's a whole lot of things that go into what we can and cannot use, what we can and cannot do. But you just want somebody who will have that full conversation, understand your full picture. Online lenders are great. They can get you usually lower interest rates potentially and lower fees potentially, but they may not have someone you can call and ask questions to, because not everything is black and white in this business, especially in VA lending. There's so much gray area.
There's so many people too that I found as a veteran who just don't know a whole lot, but they claim to be a VA lender.
Right, absolutely. And I've been doing this just over 10 years. My mom's also a VA underwriter.
Oh, really?
She's been doing it for 25 years.
Okay.
30. Time flies. She's been doing this forever, and I work with my dad. My dad's been doing this 42 years.
I remember you guys telling us that at that last session.
Yeah, so I am, don't want to claim myself a VA expert, but I am pretty
knowledgeable.
have
a lot of VA people around you.
Absolutely. When I don't know, I call. I say, Mom, what does this mean, and can I use it? Because there's so many things that go into this process, and you got to know all of it.
Yeah, well, you guys hear that on my channel. You know, all of my veterans out there, we need people who can help guide us, because we have up to $1 million VA entitlement, a lot of us, and it's important that we have people that can guide us, through this process, because a lot of us want to, buy, duplexes and triplexes and fourplexes, but you need the right lenders that can help us.
Absolutely. And even if right now, let's say you're renting and you just don't even know where to start, our application at Sunflower is free. We can do a soft credit pull, so we aren't hitting your credit score. We're not affecting it. But I recommend, if you have not talked to anybody, just start the conversation. Yeah. Because I've run into
nothing to lose.
Yeah, absolutely. It doesn't cost you a dime. It'll take you about an hour to have to do the application, get me the documents, and have the conversation. Just at least as a starting point, because it can change your life. The two biggest ways people make money in this world, top two ways, is real estate and investments. So use that first one, especially as a veteran with 100% financing options. Use it, use it, use it, because there's just so many benefits to a VA loan specifically, and there's a lot of things out there you can do.
So I also had another question for you. So how do you get past the hurdle sometimes with the competition from the new builds, like when they try to come in after you might get somebody approved?
So I'm going to say this a lot. It depends.
Okay.
So it depends on the builder, and it depends on their incentives and if they're willing and able to use an outside lender. So some builders have a preferred lender in-house. So their incentives can be tied to that joint co-op. I don't even know the right word to use. But that joint venture that they have, they may only be able to use that incentive together.
Okay.
So when that's the case, there's not a ton we can do, but I tell every client, at least let me have the conversation with you, because I'll tell you if what they're giving to you is really, because a lot of people will say that's free and free money, and it's not always necessarily free. So even in that case, let me review it. I will tell you if I cannot compete with it. Their numbers may just simply be better. But I'll tell you, oh, well, they're giving you this money, but they either could be getting it from you on the back end here and the interest rate buy down, if I'll make up a reason, or just they could be getting it from you somewhere else. So always check the fine details, and I am willing and able to help anybody read through that information and understand it from a lending perspective, because you never know where it is. We have an incentive for new builds. It's a 1% incentive of the loan amount. So that's kind of our backup option if we can help in any way. So if the loan amount's $500,000, we'll offer $5,000 as a lender to use towards buying down the rate or closing costs. But always ask your builder, if you are looking at a new build, is this incentive only tied to your lender, or can I use it at an outside lender of my choice? Okay. Because at the end of the day, it's your choice where what you build, what you purchase from the builder and who you use.
Mm-hmm.
It's just, will the incentives carry with you or not? So always ask, because you always want to know who is going to be doing the lending on my loan. Can I call them? Can I text them? Are they servicing their loan for 30 years? Are they not? Is this person going to be here in a year? You don't know. In this business, we see people come and go a lot.
That's true.
So just have that conversation with the builder. So it depends if you can or not take it with you to another lender. It's just how tightly is that money tied to their relationship.
Yeah. That makes sense. And I will say too, every builder is not the same. And what I have learned is there is a special touch with private lenders. Yes, there's some great incentives with the new builds. I'm not going to front on that aspect, but the relationships that I've built with some of the private lenders, they have serviced my first 2 VA home loans. And I've still been able to get the incentives from the new builders because they were not able to close me out.
Absolutely.
So that's a message to my veterans on this live. You know, you can still get your incentives from the from the home builders and still use your private lenders because they saved my deals. They did, you know.
Absolutely, because sometimes the in-house lenders, they may have just been thrown into the deal. They don't understand your whole deal. They don't know your whole application. They don't understand it. So we may have had the conversation for an hour, 2 hours in my office. So I know.
And they answer my phone calls.
Exactly. Phone calls, texts, all that. After hours, during hours.
Was my therapist, everything.
Yeah. Help in any way we can. We are here to help. Absolutely.
But what else did I have? So from the buyers, a lot of buyers, I have some people from out of state. They wanted to know about investment properties and how you can help, you know, people who wanted to buy a second house. What loan products do you offer for that?
Absolutely. So we do have a lot of conventional second home products, investment property product options. Now on conventional lending, the pricing is the same on second homes versus investment properties. So there's really no benefit of one over the other for interest rate purposes. What's cool about an investment property is if we get a current lease, first month's rent, and security deposit, if you're purchasing an investment property new, we can use that rental income against the mortgage payment for qualifying. So if your mortgage payment's going to be $2,000 and you're going to make $1,500 in rent, we can use that to offset. So I only have to count against you $500 a month in debt. Okay. So even investment properties, people always assume or don't know what they can qualify for. So be open to that conversation too, of kind of the nuances of what can get you the investment property income and how we can use it. If you're buying a duplex, let's say, and both are currently rented out, and we get those lease agreements, as you will, from the seller, we can use that rental income for qualifying for you. So we don't have to count the full mortgage payment against you. So that's a wonderful benefit to, especially when they're currently rented out. You already know what
if you're buying something
for.
That's already rented. Okay, gotcha. Okay.
So we can use what they're already paying in rent to offset the mortgage payment. So you may be able to afford a bigger investment property than you even realize because of that current rent already being taken into account.
Okay.
So there's benefits. Often a lot of lenders require a minimum 20% down. There are some that 15% down is available. You just got to look through all the options that you have and talk to a couple different lenders to see what the options are and what that payment's going to look like.
Okay.
Because again, with all 5 factors that we mentioned earlier that come into a mortgage payment, you've got to look at, okay, this is what the mortgage payment's going to cost, but now I'm the landlord, so I've got to cover all the other things. If, you know, something goes out with the plumbing or whatever, what is the holding cost going to be of this house as an investment property owner?
Okay, but you're not requiring like LLCs and all that other stuff that the other type of, or do you require those documents too?
It depends on if It depends on the loan program.
Okay.
And it depends. We have about 50 different loan programs.
Oh wow.
To get-
Okay.
to
They
let-
do. Okay. You do.
Yes.
Okay.
We have a ton.
Okay.
So some may require X, some may
Okay.
require Y. There is no blanket answer for that.
Okay.
Just because some will and some won't. Some will allow you to close in an LLC. Some won't.
Okay.
Some will require the full tax returns of the LLC. Some won't.
Okay.
There's bank statement products.
Okay.
There's a ton out there. It's just, what does your situation look like? And I always say, what is your goal at the end of the day?
Okay.
Is it tax savings? Is it lowest payment? Is it whatever? Talk through all the options to see what makes the most sense for your situation.
Okay.
Because everyone always says, I'm just looking for the lowest interest rate. Well, the lowest interest rate may not benefit you.
Mhm.
What if you don't have the down payment or closing costs cash
Mhm.
in the bank, and we can take a higher interest rate, offset some of those closing costs, and now you can afford this home.
Mhm.
So there's so many reasons and so many different ways
Okay.
that
Okay.
all the loan programs can benefit you.
Okay. Now, what would you say so Dallas has a lot of business owners, a lot of people who are business owners, and maybe that's their only source of income, and they're renting right now in this market with everything that we just talked about in the intros going on. What would you say to them about purchasing a home in today's current market in Dallas?
I would say, and we're talking about primary residence purchases.
Yeah, they're
because
first
renting.
time home buyers.
I would say have a lender talk to you and talk you through your tax returns, because so many self-employed borrowers don't understand what income we can use.
Okay.
So we've got a specific, let's just talk Fannie Freddie specifically. We've got a specific spreadsheet that I've shown my clients because they're like, there's no way that's what I make on paper. Well, I'll show you. There's specific line items of the tax return that we can use. So normally we take the net income at the bottom and then specific write-offs that we can add back in to give you credit for. But so many say, well, I made $1 million gross. Well, your net was $100,000. So there's only so many things I can give you back to that $100,000. I can't just give you that $1 million credit because you wrote off $900,000 and Uncle Sam took that from you on paper. So you have to look through the tax return with a lender to see what can we legitimately use as income. Because you may understand you get of the $1 million, you may get that as deposits in your bank account, but then you write off the commercial real estate that cost you to do, write off the goods and cost of services and all these things. You write all those things off, so that's not counted as income on your tax return. So we have to back that out. So check with a lender, walk through your tax returns, and the conversation may be about with your CPA showing them, hey, you don't have that many write-offs next year because you used too many for us to qualify you against. So look through your tax returns with the lender, and if at the end of the day you're comfortable, let's say you don't make enough on your tax returns, you can look at a bank statement loan. So there's bank statement loans for self-employed borrowers where we can just take the debits and credits of your bank statement of the deposits of your business, and we don't have to necessarily count against all the write-offs that you do on your tax return.
And that's what I think kills a lot of people is they write off so much stuff, so they're like, oh, well, I don't make enough income as a business owner.
Exactly.
Okay.
So bank statement loans are actually not too difficult to do and can help. However, there is a cost because they're considered a riskier loan in the secondary market. The interest rate is normally going to be slightly higher than the standard ongoing rate. So with that understanding of I can just use bank statement deposits to get the loan, they define that as riskier, so then the overall payment may be slightly higher, but it may be better than adjusting your write-offs and changing your taxes owed at the end of the year. So another thing,
taking that loss.
Exactly.
Okay.
So maybe $100, $200
Some
more
tax
in
school
payment.
in this conversation today. Okay, I'm
Whole
learning
lot of
some
reasons.
stuff.
Whole lot of reasons to look at both.
Okay, just a few more questions and then we'll let you go. So what would you say to the singles out there in Dallas? You know, there's a lot of singles They may not be single because they're living together, but so there's. We're not judging though. We're not judging you guys over there.
You make your decision.
But so they're saying they want to wait till they get the ring before they buy the house, but they're already living together. But aren't there some like benefits of just going ahead and getting that equity together while y'all already living together? What would you say to those couples that are living together but they're not buying the property together?
If
What are their advantages of just going ahead and doing it while if you know
that's where you're gonna go.
Yeah.
I've got clients right now, young couple, they're engaged, gonna get married next year, but they're buying next week because they know that's where they're going. So there's so many benefits to homeownership, and in Texas, if you're buying the home together, you're both on title, both on the note, and it is considered community property between the two title owners. So you both have 50% ownership. So let's say, we never want to say this, knock on wood, but let's say things don't work out.
Right.
You still have 50% and 50%.
Okay.
And so when you do go to that big old divorce court or wherever you're going, if you go there, you still have 50-50 because you're both on title, both on the mortgage. So I personally, if you're already paying rent, you're already splitting it. Let's say your payment's $2,000, you're each paying $1,000 already, and the mortgage payment would be the same. You're only gonna get benefits of home ownership,
even if you just stay boyfriend and girlfriend, regardless.
Absolutely. Now y'all will decide with your CPA where the tax write-offs will go. That's between you and them. But at the end of the day, y'all can both be on it, both make the payment towards it, benefit both of your credit reports, benefit both of y'all in the long run.
Financially.
Because you're still appreciating value in that home. You're getting tax write-offs, and rent is 100% nothing. You get no benefit from rent on paper, where you get a ton from home ownership. So I'm a big believer in it still. I always say this, have the conversation, because the conversation's free. We're not lawyers. We don't charge by the hour. So call us to ask, see what we can help you with or talk you through what the worries would be of home ownership together. Because again, at the end of the day, if y'all signed a lease, you're still stuck to each other.
Lease together,
Right.
Exactly. That makes no sense, right?
You still sign the paper.
You still signed the lease together.
Yeah, you still sign something. It's just the term of that agreement. So
yeah, that makes totally sense. So much sense. And then so with immigration, that has changed too as well, as far as buying a house. As far as green card holders, has that changed?
Oh, yes, it has. FHA loans have changed slight requirements, and I think Fannie and Freddie changed after them. I don't do a ton of green card business, but it is a guideline that we can look up to see. Let's say you do come to me and say, this is my resident situation. We have access to the updated guidelines to see if you do or don't qualify based on your residency situation. So everything changes all the time. All the time. So always ask, call, and see what works for you.
It's regarding that.
Yes,
Other than that, I think that was it. We can see if there's any questions, comments up there. Yeah, just comments. Doesn't look like we have any. Oh, they asked about zoning. Someone asked about zoning. Yeah. Someone asked about zoning. I don't know what they wanted to know about zoning.
I was like, you can always call us later.
Yeah, you can
give us more information on the question.
Yeah, I'm not exactly sure what they wanted to know about zoning. But yep, so thank you guys so much for tuning in. We're going to do some more of these live lender events so you guys can get more information, and make sure that you guys answer the question regarding the credit score. We want to know if you guys know what the minimum score was. I think she said it earlier, but if you didn't catch that, the question was, what is the minimum credit score to get approved for a FHA loan? If you can put that in the original post on my Instagram, Sierra Tate Realtor, you will win a free gift card for these groceries, because I know somebody is looking for some groceries at Kroger's if you live in Dallas. So give me the answer to that. Y'all have until, I don't know what the time is. What's on your phone?
It is 12:33.
Y'all got until 12:40 to give me the answer to that, to get this gift card. All right, I will talk to you guys soon. Peace.
Thank you.
Thank you, guys.